SN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
We are back, and you are listening to the Financial Survival Network. It's Kerry Lutz here, and David Morgan, our good friend from themorganreport.com, is back with us. David, how are you?
Doing well. Thank you, Kerry.
Hey, so holiday weekend, employment numbers come out. Ostensibly, 288,000 jobs are added, but not all good news. Number of full-time jobs down 500,000. Number of part-time jobs up 800,000 under the new magical record keeping by the BLS. That's cause for celebration. Gold's down a little bit. Silver's down a couple pennies. You're thinking, is it time for a raid?
Well, I just did an update for the members on, a trade that I just put on when silver broke through the $21 level basis of spot month. And so we're up slightly, or I am, I should say. But, I've witnessed these 3-day weekends before, and they're troublesome because normally the rate is soft, light volume going into the day of the holiday. And then once the holiday is over, meaning, the 4th of July, 5th, and 6th, you come out on the 7th, Monday, July 7th, all of a sudden there's a huge move on whatever market I happen to be in. I've been in the futures market on and off for, over 4 decades. So I learned that one kind of the hard way. It's probably a good idea to be flat or very light. It doesn't matter if you're long or short. I'm speaking from my own personal experience. It seems that no matter what I have on, doesn't do well when the holiday ends. So my experience shows that, you got to be kind of careful on these extended weekends, what happens on the following Monday. Does that mean that there's going to be a big raid on the metals on Monday? I don't know, but I am cautious.
It certainly wouldn't surprise you, would it?
No, it wouldn't. Not from, again, my experience in these markets. So, but it could be one of those turnaround days too. I mean, they could be hitting it as hard as they could coming in on Monday, and the market, sympathizes for a while and then does a turnaround and closes, even or higher. I mean, there's lots of possibilities. I think the main point I want to make, Kerry, is that I really think that the bottom is in. And I really think the new bull market trend is intact, and it certainly will be tested more than once on the way up. And it's certainly, in my view, not going to be strong immediately, but we've built the base. We're coming up off of that base, and I think that trend will continue.
Well, there's still a ton of skeptics out there, right? A lot of people who were burned before, and they're just not going to jump in until they're convinced, right? Which is probably at the 1,500 mark.
There's that wall of worry that all bull markets climb. Certainly this, 3 years in the silver market and, 2.5 or so in gold, where it's been basically in a downtrend or sideways trend, and psychologically beating up the market to a huge degree. And as you said, a lot of skepticism out there. So that wall of worry gets climbed. And yes, I think you're right. What I've said, that the $26 level for silver and about the $1,550 level, you could say $1,500 for gold, are the psychological levels that we had this huge, massive paper sell-off. And those levels held for quite some time for gold and silver respectively. And then they were torched to the downside with massive amounts of paper flooding the market and caused both gold and silver to breach those very strong support levels. And since that time, we've been below those. And now I think, as you say, Kerry, and I'm agreeing with you, once we breach those levels to the upside and maintain them, in other words, we could get to 1,550 gold, and then it gets pushed down to 1,490, and then it gets up to 1,505 and pushed down to 1,480 and whatever. Usually when you breach those support levels, coming back through them to the upside, and you find that level as support again rather than resistance, it turns to resistance for a while. So my experience is that you have to go through it about 3 times. So the example I just gave is, don't focus on the numbers I gave you, focus on the idea that you get above the level, then you go below it, you get above it, you go below it, you get above it, you go below it, finally you come up above it for the 3rd or 4th time, and it stays, and now that's support again. So once that happens, all the technical traders, which is just about everybody, because everybody uses these algorithms and charts, et cetera, hardly anyone does anything by hand anymore. But the point is that once those levels are support again, you'll see a lot more money come in the market. And if you're very cautious investor, and you're looking at silver and gold as your point of view is that you want to be more assured that it's the right time. You might wait for those levels to show support and then go long, or not necessarily. I'm not saying to trade. I advocate fully paid for cash in your hand, gold and silver that you can hold. That's the only way to start a precious metals portfolio, but in my view. But that's a cautious way to do it. On the other hand, if you're a little bit more inclined to take a greater risk, buying bottoms is always, the best way. And we're, pretty much just off a bottom here in the silver and gold market. So, and the last way, and probably the best way, is what I've advocated for years. It's in the 10 rules of silver investing that you get for free at themorganreport.com. And that's to just use discipline and dollar cost average. Just say, look, I want to put X thousand into the market, 1,000, 2,000, 10,000, whoever, whatever it is correct for you, divide it up by 6 or 12 and put that same dollar amount in every month faithfully, and you'll come out, as long as you're in a bull market, quite well over the long term. And it takes a lot of emotion out of the market. I mean, these markets are quite emotional, especially the metals markets, because most of the people in the metals markets, certainly not the fund managers and some of the big money that moves in and out on momentum, but I'm talking about the smaller investors. Some are large, sophisticated investors, but nonetheless, it has to do with, real money, honesty in the system, a monetary system you can trust, and all those factors. So there's more of a psychological holding to the metals than there are, say, in something like a certain, company stock or something. But they are emotional. All investments are, but I'd say the metals probably more so than most.
Yeah, especially when you really have to be a contrarian in this day and age, right? When you got every newsletter writer out there, everybody saying you got to be crazy to be in gold and silver, right? I mean, it really takes a lot to be a precious metals investor in this day and age. But on the other hand, the mining shares have really been the place to be so far this year.
Yeah, I just did an update last night, as I mentioned, and looked at some of the shares. I mean, some of these companies are making pretty significant highs right now, and almost all of them are up, and several of them have gapped up. So all those indicators are that we're on our way. Not that it won't go up and down; they all do. But I'm pretty convinced by what the market's telling me, not by what I want, but what the market's saying is that the bottom is in. Better days are ahead of us. Again, it won't be instantaneous, but it's a good time to get back on this if you're so inclined. And I really think that a year and a half, 2 years out, anyone that's in this market at this present time is going to be very happy that they are.
Yeah, that I'm inclined to agree with you on that. And, if obviously you want to have the real thing in your hand or in your possession or within your control, within your grasp, put it that way. If you're looking to get into the mining shares, into the, stock end of it, how's the best way to play that?
Well, everyone's got a different idea about that. I mean, I know most of the other writers in the industry on a first name basis. My approach has always been to do a balanced portfolio, which means top tier, mid tier, and speculations. And speculations are just that. You speculate. You bet a little to win a lot. And some of those have paid off very well. And in fact, in a speculation, if the company proves that it's going to move upward for various reasons of discovery, although we do very few, if any, exploration companies anymore, and even in the past, not that many. But as the story gets better and it's real, you can add to the position. In other words, for example, we had Western Copper that was, noted as a copper mine, and really then they changed the name to Western Silver, and that was bought out by Glamis, and that was bought out by Goldcorp. So the Penasquito mine turned into a huge winner, and that was, I don't know what it was, about a 20 or 30 bagger if you got in when we first suggested it. But the story changed. So you could have got in at, a very low price, and then even double that price, you could have put in more money or got in at that time and been actually a safer situation, because as the discovery developed and more was known about it on a knowledge basis, or having the risk profile actually got better. In other words, there was less risk to it. So that's one thing. But we focus mostly on, big money and big companies, good sized money in the mid tiers, spread it out. We don't like long lists. We do buy and sell. I mean, for an example, one of the speculations we had was roughly an 8-bagger. Well, it was a 10-bagger, and I put a stop in it at about an 8-bagger if you went in when we did. And that company really got overvalued. So we saw that as for what it was and took advantage of it. And we put it back on the list. And unfortunately, so far, it's still under the price we got it back into. But so much positive stuff has happened with that company since I put it back on the list. In my view, it's still a decent speculation, but again, speculation, bet what you can afford to lose. Spread out. The other thing about speculating is, it's high risk, high reward. But because of that, would you rather have 10 lottery tickets or one? Well, I don't know about you, but I'd rather have 10.
Yeah.
And some people, they trust me, and that's a very great thing. I want to be trusted. I want to have high integrity. But no matter who it is, doesn't mean that they're perfect. And, I get the question, I would say all the time, but often, which one's your favorite? Well, there isn't a favorite, especially when it comes to speculating, because the story of stock A might sound 5 times better than stock B. But there's no way to know on these darn things. I wish there was. There's not. But if you put an equal bet across 5 or 10 of them, and one goes in the toilet and one that doesn't sound as good or isn't as sexy or doesn't have the asset base or whatever it is that you're focusing on, and it takes off, you're going to feel a lot better. But if you say, oh, man, that one's the best, that's got to be his favorite, or I favorite that one, and put all your money, all your speculative funds in that one stock, boy, it happens.
Yeah.
People get lucky. And then that's all you hear at the cocktail parties. Oh, I bought
bragging rights.
Boise Bay at 40 cents, and it went to 312 after the 4 splits, and I retired 5 years early. I mean, that stuff does happen. But the problem, this is my take, but I've been in this industry quite a while, is everyone thinks it's going to happen to them.
Yeah.
Happened to Uncle Joe's brother-in-law's sister, but it's going to happen to them. Well, I got news for you. The probability that it's going to happen to you is pretty small.
Well, more on this when we return on the Financial Survival Network.
FSN Radio. It's all about what's next.
Warning, you might live in a no-constitution zone. It's the shocking story you won't see on TV. Depending upon where you live in the United States, you may no longer have constitutional rights. Politicians are quietly squeezing the middle class to micromanage you and extract your wealth. Want to see how? Watch the free video at noconstitutionzone.com. Soon, you'll have the last laugh by using these cultural contraband tricks and profit like a king. That's noconstitutionzone.com.
The Financial Survival Network. It's all about what's next.
We're back. We're speaking with the Morgan Report's David Morgan. So, David, you've been at this for so long. Just tell us, the worst disaster you've ever seen. Could be one you've invested in, or just one of these that you thought was the best, and it turned out to be the worst.
Well, there's several I could go into, and we had one recently on our list, but I'm not going to focus on that. I've done that on other shows. Go back into my youth. It's hard to think back that far. I'm joking, but I was probably in my mid-20s. One of the kind of silver gurus then was Paul Sarnoff. Paul had a very expensive fax service. People probably don't even know what a fax machine is these days. But I was on his fax service, and I forget the name of the company. It was something sort of benign like Gold Standard, although there's a Gold Standard company now, and it's not the same one. And it was involved in some litigation. And Paul kept putting out this fax service that the litigation is going to go in favor of this company. So I kept, it was a speculation. He made no bones about that. But, he was convinced that the ruling was going to favor this company. And I just kept loading and loading and loading and loading on it. And I had way too much money in that one little speculative stock. And of course, the hearing, had been done, and we're just waiting for the announcement. Well, the announcement came out, and I forget the exact numbers, but the idea is correct. So it was like a $2 stock on Friday. The announcement was made on Monday. It was like a 12-cent stock. So
that was quick.
Yeah,
that was fast.
Like a fortune on that. And so that taught me a couple things. And I never, this is why when I did the Morgan Reporter and continue to do it is, I don't want this to happen to anybody that's a member of the website, and of course it does because I can't control what people do. But one, litigation is something that I try to back away from. almost all cases because of this situation. And the other one is, no matter how sure something is, there's no such thing as a sure thing. So it taught me, what I already knew, but once you get hurt like that financially, it's a good lesson and hopefully one that's learned that you will not repeat. So, it's okay to bet on that type of situation. Just bet enough that if you're wrong, it isn't going to hurt you too bad. And secondly, when there's a litigation involved, it's usually best just to stand away from it and not get involved at all. Now, I try to make that a rule, but we have had a few exceptions. And if there is an exception, I tell my members that, if you will go back to one of the big silver discoveries that Pan American bought in Argentina, and I can't remember the name of the company now, but there was a big lawsuit over it, and the stock for the main company that claimed that they had the rights to it were overruled in the courts. Well, there was a time, even though it was under litigation, where you could have bought both stocks at such a cheap value that you couldn't lose. You could not lose. And that's an opportunity that, I don't want to miss. And so I put it out to all my readers and said, look, you can buy, $1,000 of this and $1,000 of the other. And I guarantee, I'm not allowed to say guarantee in this business, but almost guarantee you're going to make money. Of course you did. I mean, it was a great.
Yeah, it's an arbitrage.
It was.
That's an arbitrage. Yeah.
It was, because I follow these markets so carefully, and not that I don't miss things, I do, but I don't miss much, I'll put it that way, and that was a heck of an opportunity, and, got a few thank you letters for that one. But it was being patient, I just left it alone because it was under litigation, and people, well, you should, do this, and gosh, I met with the, the founding member of the company that had it initially, and I mean, he spent about 3 hours telling me how he sold shoes in Argentina, and he grew up there, and then. I mean, I think it was very sincere. I don't think he was misleading me in any way. I think he truly believed that the courts are going to rule in his favor. But I just listened to him, very patiently and courteously. But I did not make a move. I was not going to be swayed. I was not going to be influenced to change my views based on my experience. So probably beat that one in the ground, Kerry. But lesson learned.
We've all got these stories. One of my biggest hits ever was on a little stock called TiVo, and I was, being a lawyer, they were having a patent dispute with Dish Network over the time shifting technology, and this was the key test of their patent. And studied it. They had won in the U.S. District Court, and Dish was appealing it. I read everything on that, and I knew they were going to win it. I absolutely knew they were going to win in the Court of Appeals, and, took 9-10 months, but they won it and got a boatload of money and became hugely successful in licensing their technology, but the stock just never went up as much as I had hoped, but it still was a good hit and did make a good profit off of it. So like you say, you just can't tell litigation, but there are litigation arbitrage funds out there that, mostly patent trolls and that type of thing that do quite well doing it, but it's not the kind of thing the average person really can get into. And even professionals get burned on it because the courts are a crapshoot in this day and age. Let's face it. You'd never know what's going to happen. Even when you win, you can lose. And look what's happening with Argentina now with an old client of mine, Elliott Associates. They're basically shutting down the country of Argentina, causing them to default on their bonds. It's pretty funny.
It is. It happens, every 10 or 20 years in Argentina. It's a story that's kind of recycled or, press the repeat button. Sad, very sad. I don't know what else to say. We certainly, I think what I like to say is about the expertise in a certain area of the market. What you said about this arbitrage with the patents and all that. I mean, there are people that specialize in all kinds of, little intricate details of the stock market or the financial markets. And, that's basically what I do. I mean, I focus very much on a very small sector of the market. I pay attention to the overall market and the macro trends and all that. I'm a top-down analyst, so I have to pay attention to everything. But when it gets down to it, if you weren't looking at that arbitrage opportunity that I just outlined, most people that understood it would have said, geez, that's a no-lose situation. I'm on it. But unless you have somebody there to kind of look at that kind of thing for you, because you're too busy doing your job, you might have missed it, So that's sort of the reason why some of these specialty situations are, worth the price. I mean, certainly not going to pat myself on the back over the last 3 years because things have been very difficult. But nonetheless, I think the opportunity is still intact, and that specialization can pay if you get the right expertise working for you. And again, be a human about it. No one in any sector is perfect, or gets it right 100% of the time.
Yeah, you got it. So, but the one thing about this sector, and reminds me of Ben Graham, is when the prices get low enough, you have a thing called the margin of safety, right? Assuming that the company is solvent, they've got enough cash in the bank, then your risk, because the price is so low, really goes down considerably. And I think that's where we're at right now in these gold and silver stocks. The prices have gone down so much, and assuming they've got enough cash to survive, really your risk has really decreased considerably, right?
Correct. Yeah, no, well said.
So, and there were even stocks up until recently that fit into the, Benjamin Graham net, where you could buy them for less than the cash minus the liabilities of the company, but not too many of them left, right?
Correct. There are some, but, there's a lot of little ones that are, still struggling, but probably come up off the mat and will probably survive. And I'm sure there's some of those that we'll be talking about in couple years or so that will, be huge success stories. And those situations are great. I mean, you just don't want to get too greedy, I guess, is what I'm trying to say. Yeah. I mean, some of those situations, if you've got, X amount to invest, you don't want to put half X into one speculation. You want to put, for me, I mean, if I put like, say, 500 into something like that, or say 1,000 at the most, and it goes to 10,000, I just bought a used car for $1,000 is the way I look at it. I mean, I take that off the table, and, it's a 10-bagger. But, the bigger stocks that I have in the top tier section portfolio, I mean, every one of those that I can recall is up 135% or more from the time we listed it. You got to remember the Morgan Report's been around for 16 years. But, these are, and I won't say they're a no-lose situation. I mean, let's look at one, Silver Standard. I mean, we had that thing in at 65 cents Canadian when the Canadian dollar was nothing compared to the U.S. dollar, okay?
Yeah.
And that stock went to 40 U.S. I, do the charts and all that type of stuff. And I saw it getting weak, and I said, it might be a good time to get out. And I forget the exact number. It was, I think, 25. And, that stock is really low right now. It's much higher than when we recommended it. But, a lot has, been taken out from what it once was, and as are many others. But that stock was a leader for a long time, and it hasn't been a leader for a very long time. And what we do every month in the Morgan Report is we tell you what the top 3 leaders are in the top tier. And our philosophy there is these are stocks that you can pretty much buy and hold for the long term because we feel the fundamentals are so strong, the market caps are big enough, liquidity is strong enough, and that type of thing, that if you want to be, pretty passive investor where you can just, buy a portfolio of it. You don't want to buy just one stock, hold it, and just wait and, wake up when the market's topping and your brother-in-law is calling you up and saying, you're right about gold, I have to buy some, where do I go? When that phone call comes, you want to call your broker and unload your positions and then tell your brother-in-law where to go buy gold.
Yeah, speaking of brother-in-laws, well, on that note, David, just tell us again where we get the Morgan Report, how we subscribe, what kind of offers available.
First thing to do is go to themorganreport.com, and I suggest you get on a free email list that comes out every Saturday. You can kind of get used to how I write, and the shows that we do like this, they're always posted for you. There's a YouTube channel called Silver Guru, which we archive most of the interviews. And then if you want to see what news I'm reading every day, me and my staff, you can look at our Twitter feed, which is at SilverGuru22. As far as the report goes, you can go to, again, themorganreport.com, and over on the right-hand side, there's a pull-down menu for the basic service. If you do the basic plus service, you're allowed to email me your questions. So at the advanced level, you can say, hey, David, blah, 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 blah. The only thing we can't do is give individual investment advice. advice. So if you say, hey, I want to buy XYZ mining, what do you think? Should I put this much in it? And that type of thing, we cannot give individual advice. And, that's going to be your answer. But outside of that, most general market questions and on specific stocks, what we do is, as long as they're in the portfolio, we usually answer them in the report for everybody's benefit. And of course, that's beneficial to not only the one that writes the question, but everybody else that's a member.
Yeah, that's what you have to do. Because we're not individual licensed investment advisors. We don't want to be. And it's important that you understand that. Go to your broker for that and hope for the best. Hey, David, always a pleasure. Don't forget, go to financialsurvivalnetwork.com. You'll find the link to David's site there. Sign up for the newsletter. We'll talk to you again real soon, David. Thanks so much.
My pleasure, Kerry. Thank you.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.